What's up, Facebook? Ty Crandall here with Credit Suite. Today, we are talking about revenue lending loans. We're going to talk about how you can get money for your business based on your cash flow only. Now, I call this the 3 C's of lending formula to get approved for financing. And if you want to get any kind of loan or credit line, there's really one of 3 things that you need: cash flow, credit, or collateral. Well, if you have cash flow, then you don't really need collateral and you don't need good credit to get financing for your business. And today, we're going to be talking about how to do this through what's called cash flow financing. Now, we're making some adjustments on Facebook Live. We're back after a long hiatus to get some of our tech issues worked out. I know some of it's a little back and forth with what you see on the video, but I'm trying to work on audio with my AirPods, so hopefully that's going to help. And I think I may even have access to your comments today, but we're going to take a look and see if we can get that technology to work like hopefully it will work, so I can actually see some of your comments as they're coming in as well. So we will see how all of this plays out today. If not, be patient as we get figured out our tech, because a lot of cool things will be coming as soon as we do get these things figured out. So let's go to the chalkboard. So today we're talking about revenue lending. We're talking about remarkable revenue lending loans and credit lines. So what you need to know about this is that when we talk about revenue lending, this is an alternative kind of financing. You don't need collateral. You don't need good credit to qualify. And unlike angel investing, venture capital, you're not giving up a percentage of equity in your business to be able to get approved either. Like I said, with revenue financing, it really comes down to you being able to qualify for financing based strictly on how you actually manage your bank account. And that's what we're going to be diving into and decoding and dissecting today. So, first of all, revenue-based funding details. Let me kind of give you an idea of how this works. So, approval is based on your bank account management, okay? Credit and collateral don't typically matter. So, let's talk a little bit about what they're actually for. So I just did a session on this the other day on YouTube. If you want to check it out, go to youtube.com/credit suite. Here's what you need to know. When it comes to bank account management, there's several things that lenders are basically looking for to determine if you actually meet the criteria that you need to meet to be able to get approved. Now, this criteria includes how well you manage your bank account. Do you have non-sufficient funds? Do you have positive cash flow, meaning you have more money going in your bank account than going out? Do you have a lot of transactions, a lot of deposits versus just a few? Do you have a positive ending bank balance at the end of each month? These are the type of things that they're really looking for to determine if you're going to qualify for these kind of loans. If you manage your bank account responsibly, there's a very good chance that you're then able to turn around and get approved. So the other thing you should know is most of these lenders are looking for basically one of 2 things: 12 months time in business, that's what TIB means, and $10,000 a month in actual revenue. You need both of these to get approved with most lenders, okay? There's 2 kinds of this type of financing. There's what's called merchant cash advances. Those only look at your merchant account transactions. Those look at your transactions basically of what's taking place going on through credit card transactions only. Revenue financing looks at money going through your bank account through cash deposits and checks as well. So typically for merchant cash advances, if all you want to use is just the actual deposits in your merchant account, you can get approved with 6 months time in business and only $5,000 a month in revenue. But most lenders with this kind of financing that are looking at all of your revenue, including checks and deposits, what they're going to want to see is that you got 12 months time in business and that you've actually got $10,000 a month in monthly revenue. You see those 2 criteria right here advertised in an ad on Facebook or etc. That's typically what they're looking for. So let's talk about some sources that can help you here. Fundbox. You can go to creditsuite.com/fundbox to get approved. Now, this is where you can get a line of credit with a 6-month payback term with rates under 5%. Now, you only need 3 months time in business and about $5,000 a month in annual revenue. And this is the future of lending. This is based on artificial intelligence. When it comes to Fundbox, it's one of my favorite credit lines. It's one of the easiest to be able to get approved with. Now, AI and how AI is changing what's going on in lending is that instead of supplying bank statements like you will with a lot of these lenders we're going to talk about today, with AI what happens is they'll actually have you log into your bank account through the approval process. Their system, their computer goes in, does the analyzing there automatically without manual review of your bank statements. So it means it's much faster. What I like about Fundbox, you can get approved same day and typically fund the next day. So it's much easier to get than a lot of other type of alternative financing out there, and a lot of other cash flow financing. It's so fast because of how they're evaluating your actual bank statements. Now, line, another source I want to look at, and I'm going to skip around here a little bit, is I want to look at Bluevine. So Bluevine is very similar. You can get up to 250,000. Okay, typically with a credit line, they're going to give you up to about 150,000. Where Fundbox, you're going to get approved for about up to 100. Okay, they'll do weekly paybacks, and they'll also do a 12-month term. So the payments are lower on Bluevine when you actually use the credit line than you're going to find with Fundbox because the term is about twice as long. Okay, rates are pretty low. They're going to want you to be business 6 months, and you're going to need a 600 FICO score or higher to get approved. Okay, and they're typically looking for about 100,000 or more in annual revenue. Bluevine and Fundbox, I put them both together because they're both artificial intelligence. They both use AI to manage and to look at your bank account to see how you manage that bank account and then determine your approval. So they're very fast approvals. Again, the benefit of Fundbox is that it's probably easier, not probably, it's easier to get approved with than Bluevine, but you get half the term you get with Bluevine. So your term is better with Bluevine, meaning the term is longer to pay it back, so your payments are lower, okay? But with Fundbox, it's a little bit easier to get approved. Both of them are very fast approvals, though, because they're using this artificial intelligence to actually come in and get you approved. So let's take a look at another one of these sources. Let's look at OnDeck. Now, OnDeck is the biggest source when it comes to revenue financing. Okay, they're a publicly traded company. You can get up to $500,000 in financing for them. You can also get a line of credit with them as well for $100,000 with a payback term of about 6 months. So they offer lines of credit and they offer loans. Now, they'll get you approved with as low as a 500 FICO score. They want you to be in business 9 months or more, and they really prefer 12 months as well, and no bankruptcies in the last 2 years. So OnDeck is probably, again, notable source in the space when it comes to revenue financing. They're the most well-known, not to say their pricing is the best, but again, they're very, very popular in this space. So if you're just looking for a typical revenue loan up to $500,000, then you could typically go to OnDeck, great source for that. Now, let's talk about loan approvals. I say up to 250,000, up to 100,000, up to 500,000. The way the revenue financing typically works is you're able to get financing for about 10 to 12% of your annual revenue. So whatever your annual revenue is, you're typically able to get a line of credit or a loan for about 10 to 12% of that. For example, if you do $500,000 in finance or $500,000 in revenue in your business, you're typically able to get financing for about 10 to 12% of that, which is about what, $50,000 to $60,000 in financing. I'm checking in on my comments. It doesn't look like I can see your comments right now based on what's going on, but I will get that figured out in the future so we have this working. So I will go back in our Facebook Live post and I will go into the comments in Facebook and I will answer your comments if you're here with me live. So again, when it comes down to how much money you're going to get approved with, it's based on how much your revenue is. You're typically going to get approved for about 10 to 12% of whatever that annual revenue is. Now, beyond OnDeck, Kabbage is one of my all-time favorite lenders, okay? You're able to get up to $250,000 in financing. You can even get monthly payments with them, which isn't common with revenue lending. A lot of times it's daily payback. They're taking money daily out of your bank account, sometimes weekly, sometimes monthly. 1 year time in business at about $50,000 in annual revenue, and you can get approved with a 560 FICO score. Now, you can go to creditsuite.com, I think creditsuite.com/Kabbage, or you can go to Kabbage Direct to be able to get approved for that as well. Now, let's look at life. Okay, with this, you're able to get up to $1 million is what you're able to get approved with. Okay, it depends on your revenue. Okay, so another really good option to get even more money if you have higher revenue. And again, they want to see that you've been in business at least 1 year. You can go to lightercapital.com to get approved for that. Two other sources I'm going to mention real quick before we wrap up. SmartBiz. Okay, they also offer SBA loans for $30,000 to $5 million. Very low APRs compared to most revenue financing and longer loan terms. So this is the key. If you want low payments, the longer loan term makes a big difference. And again, with this, a lower rate also makes a big difference. But they want you to have mid 500 FICO scores and 2 years time in business. A little bit about this. Revenue lending gets a bad rap, and it's typically because the rates are pretty high. You could pay 20, 30, 40% interest rate on revenue financing. But let me tell you something. I've also got these kind of loans and only paid 8% interest rates. Here's the difference. If you have good credit, if you're in a low-risk industry, if you have good time in business, if you manage your bank account responsibly, those kind of things can actually get you pretty good pricing on this kind of financing. So don't believe the hype that you're only going to get really high rates with this financing. If you find the right lender that likes your industry and you've got lower risk factors like better time in business and better credit, then you're able to typically get approved with lower rates. But the great thing about this kind of financing, even if you're in a high risk industry, even if your credit is low, even if your time in business is short, you're still able to get approved, but the terms obviously aren't as favorable because the risk is much higher. So it gives you an idea of what to expect, a time frame when it comes to actual terms. And when it comes to time frame, you're typically able to get approved for this kind of financing and get funded within 72 hours or less. It's very fast financing. It's very easy financing. If you're not using one of the artificial intelligence lenders that we talked about, the AI lenders like Bluevine or like Fundbox, then you're typically going to have to submit about 6 months worth of bank statements to get approved. Okay, but outside of that, they'll do a review in about 72 hours. You're able to get approved and get funded. So let's wrap up with one more, GSO Capital. Okay, $200,000 to $1 million. So they deal with higher amounts of money. They really deal with software as service companies. So if you're in that kind of industry, if you're in this special niche of SaaS companies, then you want to go check out gsdcapital.vc. That's a great option to go with as well. So a lot of different options we talked about here today. Revenue lending, fast, easy money, very easy to get approved with. Fundbox, my personal favorite, creditsuite.com/Fundbox. Very easy and fast to get approved. Another one that's similar is Bluevine. You get more money and better terms, but they have a 600 FICO score requirement, a little bit harder to get approved for that kind of financing. Kabbage, one of my absolute favorite on-times lender, one of the favorite online lenders, one of the easiest credit lines you're going to find to get approved with. They're pretty lenient with credit scores, time in business, etc. One of my easier sources to be able to get financing, and one that I love quite a bit. And then on deck, they're the biggest in the revenue space. We can't forget about them. You can get loans up to $500,000, 9-month time in business. You can get approved with as low as a 500 score. And they're doing some different things here, even giving you access to lines of credit, even kind of hybrid type loans that are a little bit advanced from typical revenue lending. And we talked about a couple other niche type lenders like Lighter Capital, like SmartBiz, like even GSD that deals with SaaS companies as well. If you're interested in getting approved for funding your business, go to creditsuite.com/get-funding. creditsuite.com/get-funding. So really unique about us here at Credit Suite is, first of all, we never charge you a dime of money to get approved for financing. Don't get me wrong, you're going to pay normal rates and terms and fees that the lender's going to charge. Okay, but we even negotiate that to get that better for you. And then what happens is we typically get referral fees from the lender, but we do so much volume and funding with the lenders that we're typically able to get you even better terms than you get with them directly. And we deal with over 1,000 lenders here at Credit Suite, over 1,000 lenders, every legitimate type of funding program. Revenue lending is one of like 50 types of programs that we deal with. So the nice thing is that when you're working with us, we can get you the most amount of money at the best terms because we deal with over 1,000 lending sources and we deal with every legitimate funding program that's out there today. So I'm going to go ahead and wrap this up. Stay patient with us because in the future,